Fintech neobanks, crypto neobanks seem to be one of the most exciting things, most exciting topics of the last couple months, maybe. I think ever since stable coins got liberalized and there's regulatory clarity around them, people seem to have been building crypto neobanks. Neo, I know that you work in this industry. Tell me a little bit about who you are and what you're building.
Thank you, Boaz, for having me. My name is Neo. I've been at UR for a little over a year now. I'm the CEO here. I lead business and operations. And we're building the account layer for this new wave of crypto banking that is coming to the world. What we really are is kind of like this account layer infrastructure that allows other financial products to be built on top of us. And the main basic difference is that we're built on the blockchain, and we empower all these players or businesses or projects to build on top of us to issue tokenized deposits, accounts for users who are KYC'd.
Give me an example of how this works, right? So like I'm a consumer, I want to open a bank account with a blockchain enabled neobank for whatever reason. And then if I want to open the account, then I obviously need to have an account there, and you guys provide the service to the neobank in terms of opening the account, facilitating the money transfers. Like, what is it exactly that you guys do?
Yeah, great question. So what we do, or what we are, right, if we go into the details. So UR is a licensed financial institution, first and foremost. FINMA governs us. We have a license under the Banking Charter 1B. So what we really are is, we're first and foremost a bank. We issue bank accounts, Swiss IBANs to KYC users. And with this Swiss bank accounts, they function, or the Swiss IBANs, they function like any other bank accounts, right? Users can send money in, we're connected to SEPA, SWIFT, Euro, USD, Swiss francs, of course. The users can use us like any bank account that they're familiar with. But then one of the more interesting parts of it, or the key of it is, one of the permitted activities under the kind of activities we're allowed to do is to carry out, crypto-related activities, or what we call issuing tokenized deposits. So basically every dollar or every Swiss franc or every euro that comes into this IBAN that we issue to the user, we issue an on-chain representation immediately. Right? So we issue a tokenized deposit. It's a fully reserve banking model. It's one-to-one. We don't lend or invest this fiat that you send into this bank account. And we issue this on-chain representation, and because it's on-chain, it's permissioned. So only KYC accounts can interact with this permission asset and move it. And that's how we kind of solve for the travel rule, compliance. We're audited every quarter by FINMA. And so that's at the core of what we do. Then what we do with this is we wrap like an API or like a layer where other fintechs or businesses can interact with this. So they can call all these APIs to say, hey, issue a bank account to Boaz, for example, right? Because I want to deliver him some kind of financial services, whether it's remittance, whether it's investments or lending or something. And to do this, maybe a lot of my activities are on-chain. Maybe I move money because of blockchain and it's cheaper and faster, but to get you to on-ramp, it's traditionally been tough. So what we allow these fintechs now to do is compliantly KYC them, issue them real bank accounts, allow users to send in fiat through traditional banking channels like SEPA, SWIFT, and we're adding more as we add on more banking partners. And then move all this on-chain immediately as tokenized deposits. And then users can swap, stable coins like USDC, for example, and then, so on and so forth, and they can go on and do all the use cases that these fintechs or projects have envisioned for them. The reverse is also true. So the off-ramping process is the same. It goes back, is fully redeemed back into the tokenized deposit and then the fiat. And if the user decides to send fiat out like a traditional bank transfer, we burn that tokenized deposit, and then we send out the fiat, and that's how we ensure everything's compliant. So that's what we do. That's how we help businesses and projects.
Okay, help me understand a little bit. Let's say I receive. Okay, I'm the end user, right? So I'm the consumer. I have $1,000 in USDC that I want to convert into Swiss francs for me to pay my rent in Geneva or something. Okay?
Yeah.
And I will meet, or I will open an account with one of your partners. And under the hood, what happens is your partners ping your API, right? They open an account to me as the end user. I go through the KYC process. And once I'm onboarded, you create me a set of accounts, Swiss IBAN. Let's keep it to the Swiss IBAN now to be simple. And then I have now an account with 1,000 USDC and an empty Swiss IBAN, right? Then I swap my USDC for the Swiss IBAN deposit, which what happens under the hood is your partner does a swap either through you guys or somehow else for the USDC into Swiss tokenized deposits. And then once I withdraw these Swiss tokenized deposits into Swiss francs or if I send it to my landlord, let's say, I don't need to withdraw. If I send it to my landlord, then you burn the Swiss tokenized deposits because it kind of leaves the ecosystem. Did I get it correctly?
Yeah, that's exactly what we do. So it's a multi-currency Swiss IBAN. We support USD, we support Swiss franc, we support euro, we support a bunch more, Hong Kong dollars, Japanese yen, you get my drift, right? So we can spot the user. So the user just needs to offer them through compliant means, which is USDC, receiving USD. We can do the spot into all these different currencies and hold them in this IBAN. And then it's like any other bank account. You can pay your rent landlord, you can buy things at the supermarket with an issued MasterCard, which we do. Debit card. It's not some crypto US, stablecoin card. It's linked to your Swiss IBAN, and then you actually spend that account and it's debited from your bank account, the fiat balance. So yeah, use it just like any bank account.
What's the point in also issuing the tokenized deposit, right? Because like you could also just say, hey, you sold your USDC for Swiss francs, so we update our internal ledger only to say that you have this much. Why do you need to have like internal ledger and also something on chain? Like what's the logic behind this?
Yeah, so I think the most interesting thing is, or how people used to see it is like fiat is usually like a on its own, and then there's crypto, right? Mm-hmm. And then somehow there is this bridging that needs to happen, so that you can receive crypto or you need to sell crypto and then receive fiat. But what we're trying to do, or what we have done, which we've taken quite a while to do, is that it doesn't need to be the case, right? It's just like you swapping USD into euro. You don't think too much about it, right? You just see two currencies, you make that swap. What we really want to do at UR is like, hey, everyone's taking the easy way out in Web3, Web2 worlds today, right? Easy USDC stable coins, you issue a card, suddenly you're a neobank and you can spend, and like, it's very cool, right? Structurally at its core, nothing's really changing. On one side, there's a lot of gray area sometimes on how that fiat turns into crypto or stablecoin, and then that happens to spending, or vice versa, right? And so we thought, hey, instead of people trying to find all these different hops or workarounds on how to bridge both Web 2 and Web 3, the best way would be to become the financial institution that is compliantly allowed to just sort of bridge both worlds. So whenever that fiat comes in, the most interesting thing is the whole bank is built on blockchain. That's how FINMA audits, regulates the entity. They read the blockchain to see different wallet addresses, how much money is in as has moved over like the quarter, right? And that's how they say, okay, you're free to operate in the next quarter. So because of this, in a sense, the line between what's fiat and not fiat blurs. So there's no more true on or off ramping to the consumer, right? Every dollar you send in or euro that you send in is represented on chain, has a on chain representation. And that allows your fiat to stay in this world fully backed and allow you to just swap into all these crypto assets, knowing that, hey, you have that one-to-one backing, and this compliant institution ensures that because you're allowed to redeem this at any one time. So you no longer have to go through this, and you've written about this, right, boss, right? Swapping to stable coins, who really owns stable coins, what's the risk, issuer risk. And so we don't want to have all that, right? And so I think that's why we're playing the long game and doing what is really hard, and then hopefully this infrastructure that we built will now be used by more and more, let's say, companies who are trying to bridge these two worlds to build businesses on top of, instead of these orchestration layers, right, that exist today.
Sorry, 1 second.
No worries.
Three Devils. All right. I think what's interesting about this is so it reminds me of two things, or one thing actually. Like I was actually in Singapore back in November, and I spoke to people at Ant Financial, who of course have a huge amount of cross-border payments that they need to work with, and they told me a very similar story in terms of actually stablecoins are great, but what we really need is for all of our different entities to have some sort of tokenized deposit system where we can just manage internally all of the money that comes in, comes out, etc. Makes our life a lot simpler, and then we can do settlement on rare occasions. And I think what's interesting about this is that your background is not sort of quote unquote traditional crypto background. Like, so you come from very much a traditional payments background across various different businesses. Can you speak a little bit about that, like what your background is in payments and how you basically arrived at this and why you think this is the next step?
Yeah, wow, I came like a long way, guess, to where I am today. But like there are a lot of parallels, right? And I can share, and you'll see more of why I took this natural step. So I started in consulting, but that's a very long time ago. And then I joined this e-commerce company called Lazada early on to build out payments. Lazada was back then still trying to find its feet, but already
I worked for Rocket Internet in 2015, so I'm
okay, great. So you know the
Lazada.
Rocket playbook, right? So hire ex consultants, give you fancy titles, work the hell out of you, and hopefully you get somewhere.
Yes, I worked there.
And we got lucky. I think we got somewhere. We got lucky with the hypothesis on payments, that it would go digital, that people would not. Back then, cash on delivery was the main way people paid on Lazada. We bet that it would be cards and e-wallets and all that. And so we pushed hard. I found ways around it, got people to hold digital currency back then. That was acquired by Alibaba, and then I transitioned to Alipay as a result. And back then, they had just started this global push to promote QR payments as a new, let's say, payment instrument where value would be sort of like where you would move money, right? Whatever the system on the back, QR codes would be the main instrument to trigger that. I had the frontline experience of going to Southeast Asia, convincing banks, regulators that you could let your people scan a QR code and money would move safely, right? So that was pretty crazy.
It's crazy because now we think of this as like obvious, like this is how people pay in Southeast Asia, but back then it wasn't the case.
No. It was crazy. I was like in boardrooms. I was in front of the regulator, trying to tell them that this little piece of like QR contained enough information to switch payments from one account to the other, and you could trust it. How it would work cross border with this entity called Ant Financial in China, moving and settling the money. So all this sounds very familiar, right? It sounds back then. This is called like Web2 TradFi. Today, this is now reinvented on new rails. So these are the parallels I've seen many times over. And then after that, I came back to Southeast Asia to join Grab, who was building out a bank. But early days it was just called a digital wallet. And I saw how building this digital wallet impacted lives across Southeast Asia. It sort of brought a lot of the unbanked or underserved people, into finance. As simple as giving them digital money, allowing them to transact, wasn't that simple, right? Because of that, they became visible to the financial system, and then people could basically give them credit, and then of course there's all this fancy stuff that comes on top of it, right? And then you saw this whole sort of economy lift. That became a bank. I moved on. I was at Tencent. After that, mainly working with our portfolio companies, helping them sort of see what China was up to, what Tencent was up to, and see if they could export this technology and implement it where they were. Worked with the people at PayMaya, or now called Maya, or now Maya Bank in Philippines. So basically, that was my whole career. Of course, after that, I built a startup. 4 years in, it was all about checkout, payments, accepting a bunch of different payment methods, wallets, bank accounts. But I guess the biggest lesson throughout this whole career is that most of my time was spent moving people from, I guess now what we call Web 1 money to Web 2 money, right? Cash to cashless transactions, or digital money. So we've seen how that shift happens, how we get adoption, how that adoption creates or unlocks value in society or in economies, especially underserved ones. And then what's capable after, right? And then now, I think it was the point where I saw it happening now, where this Web 2 movement to Web 3 would unlock even more, or potentially more value, to a lot of these underserved people. Also, I think it might accelerate people just in Web 1 to Web 3 immediately, in that sense. And so I saw this because the key thing for me was regulation. I think regulation always plays a big part. I think once the governments, the regulators take notice and start policing, that's when things get serious. That's when I would say like proper companies get built who are governed well, who are run well, because in the end you do handle money from these people, right? And the last thing you want to do when you take the money from these underserved communities is to mess around with their money, and that's not what you want. And so I saw that happening, and so I thought that hey, the time would be right to enter this space and either build something myself or find a project that was aligned with my goals, and that's how I got in contact with UR and the founders and the grand vision, and so I came on board.
And help me understand a little bit. Like for me, it's very, very clear. Like why, if you go from being, let's say, a delivery driver or someone that works in the informal economy, if you go from being a cash user to someone who has a digital banking presence, you immediately become eligible for financial services. You're someone who is eligible to the banking system. You can get a loan. You can invest. Like you can have a savings account. Like that part is super, super clear. And I think it's a narrative that has been said a lot. So it's like clear to people why that is such a benefit. Can you help us articulate a little bit why it's a benefit to move to the Web3 world? Like what is it that it unlocks to a person who would, otherwise, what would they have access to that they would otherwise not have access to?
Wow, that's a great question. That's a question I ask the team every day. My own personal belief, right? This is my own personal belief, is that no one wants this like Web3 or blockchain for the sake of blockchain. I'm sure you've heard this many times as well. But it's actually, I see it overcoming a lot of the issues that in Web2, this Web2 finance revolution, that these fintechs still had to deal with. So for example, when we're building digital wallets or digital wallets, right? Or these e-money, whatever you call them, stores of values, they were still heavily reliant on bank sponsors. People wouldn't really have segregated accounts, right? They would be pooled accounts under this giant fintech with a license, of course, who held it with a bank, right? In the country or in many countries, right? So they had to live with this limitation. And then when you want to invest, or when you want to send this money cross borders, then at the same time it's the same thing. Either you rely on existing networks because your bank sponsor is ultimately the one moving that money through their rails, or you rely on these networks of networks. Like basically, people who are trying to build what today I think blockchain does more efficiently is to connect all these different I guess financial institutions together and then net off that money, right, when value transfers. And so the cost is much, much lower and no real money moves, but you still get that cross-border transfers. So I think I could go on, right? But it's all these like use cases that have been built on the limitations of the old system that persists. But then now, with the maturity of policy and regulation, and also of, I guess in general, people building in blockchain, right, and the technology itself. So now this becomes a viable technology where the old world can be rebuilt on, right? And I see it happening with different like players in the system. Like Aave is rebuilding like lending in that way, right? Yeah. And then now at UR, we're rebuilding the account layer, right? What it means to hold money at an institution. It's so different now. It's self-custody, the money is yours, but at the same time, it's on-chain and off-chain at the same time. So I think this is where that next revolution for Web3 comes in, where that technology comes in to either greatly reduce the cost to serve, or it just unlocks so many more possibilities because it's just programmable now, right? You don't have to rely on a human or an institution to execute something that you want. And for me, that is the biggest unlock personally.
Tell me a little bit about like your clients. Who are they? Who is the end user that they're serving? If you could give me a few examples, that would be great.
Yeah. So one of the latest ones to actually go live, I think just last week, is this a self-custodial wallet called Topnod. You can search them, TOPNOD, and you can see they're part of a bigger group. But basically what Topnod does is they're a self-custodial wallet, nothing very fancy about it, but they focus on RWA, real assets. They have tokenization platforms, they tokenize all these financial assets for consumers to invest in, and they list them on this app where people can just deploy into easily. I think what we enable them to do is basically issue all these segregated accounts to individuals. So now, instead of them going through all these on-ramp providers previously to move fiat in, They can now issue real bank accounts, segregated accounts to all these users who KYC, who can then on-ramp in more significant amounts because you're deploying to an RWA asset, right? A money market fund, you're not going to put like $10, right? You're going to deploy like thousands or $10,000s of dollars. Traditional on-ramping or on-ramping providers will just take quite a chunk out of it, and then that 4 to 5% APY will mean nothing after, right? But we enable that at close to nothing. People pay the wire fees for the bank account, for the money to hit the bank account. On-ramp today is one-to-one, and then they can deploy directly into all these like RWA assets that Topknot chooses to list. So these are like this is one example of a client, of a pretty significant client. They just crossed the 1 million mark, user count mark recently. So we're excited to bring more of such customers online.
Yeah, that's super exciting. But like, help me understand a little bit the architecture. So if it's a non-custodial wallet, then where do you guys fit in? Like, presumably there must be like a custodial layer where you guys custody the funds of the user, right? So like, I can come in with USDC and buy RWA assets, but if I want to withdraw on-ramp or off-ramp to fiat, then I have a custodial product with you guys. Is that how it works?
Yeah, so that's what the license is for. Right, so as a bank, naturally we have to custody your fiat assets.
Of course.
But then we issue you self-custody wallets where we then do two things. One, we issue you an NFT that verifies your status to control these permission tokenized assets, which are the tokenized deposits, into that wallet. And then we issue that tokenized deposit into that wallet as well. And then you can then move the assets in this tokenized, in this wallet into, let's say, platforms like Topknot, and then start deploying into RWA assets that they list. And the reverse is true, the off-ramping back into your account.
Got it. So like, it's a self-custodial account, but in order for me to be able to interact with your services, I need to be able to pass your onboarding requirements, and I need to prove that this account is owned by me, basically.
Exactly. You just need to do anything it takes to open a bank account, basically. And then once you have a bank account, then that's your compliant way on and off chain.
Got it. Interesting. So this is a interesting sort of like hybrid way for things to work. Okay, like tell me a little bit more about, okay, like what if I want to, so the markets that you guys serve, are they pretty much global? Are they primarily focused on Southeast Asia? Like what's the sort of geographic split here?
Yeah, so we're lucky in the sense that Swiss banking is kind of global. We can issue these Swiss IBANs to people from over, I think, 40 plus nationalities. Very soon we'll add about 100 more. So basically it's just a blacklist in the sense where we can't serve sanctioned countries, nationalities on the watch list, gray list, but any others we can serve. We also don't serve US citizens. But anywhere else we're good. So large parts of Asia, Latin America, we serve. And this is where most of our partners are asking us about anyway, because I guess what we do solves the problem in these regions more than others.
Got it. Well, like I'm like, just looking at all this exciting new infrastructure that's coming online for neobanks.
Yeah.
What if I was like a neobank founder? What if you and I met somewhere and I said, I want to launch a neobank that focuses on like Central America. I want to focus on like one particular like small set of nations, and I just want to be super localized and offer really good UX and go to small countries where no one's really decided to compete with the entrenched industry participants. What advice would you give me? Like, what is the stack that I would need? Like, how would I go about doing this as a quote unquote neobank founder?
I guess my biggest question would be like, what is your USP, right? I mean, other than you taking deposits and giving them a card to spend with, I think that would define your stack. So for example, right, I guess I'm giving a very vague answer. So I guess if you have no true USP, then most probably I would tell you not to do that in your bank.
Yeah.
Don't issue that card and don't try to fake it, because it's the tough world out there. But if there's a specific segment of users you serve, and a very specific kind of use case that you want to give, for example, if you are all about remittance, right, then there isn't really a need to hold funds. Funds don't really sit in the account for too long. Funds just move cross border, right, and that's about it. Then I would tell such people like, yeah, you're not a neobank, right? Orchestration platforms where you pay to just move money, those fit because your balance doesn't stay at any one place for too long, right? It's a last mile. You're just an intermediary. Last mile is always the user's personal bank account. So my Singapore bank account, I go on RAM, send it to your app, you move it, and then you go back to your bank account. I think that's when the account layer doesn't make sense. But when you do become some kind of account holding layer where funds or fiat actually sits in let's say your bank for long periods of time, maybe because you are building some kind of financial super app or you are building some kind of investment app, I don't know, right? I don't know how creative people get nowadays, but so many possibilities, right? Then I think it pays to invest in I would say like an account or infrastructure provider like you are that gives you that compliant account where funds can sit and are segregated and still belong to the user. Because if you don't, then you open yourself to a lot of risk. And as a bank holding or as a neobank holding users' funds in that sense,
Yeah.
you don't want to have that.
So let's
I
say.
think a lot of people.
Sorry, go ahead.
No, and that's why I say a lot of people eventually they transition, and I see that happening with a lot of our clients. So they start with orchestration platforms because it's all about moving money across borders and holding stable coins, and then they realize that hey, actually there's no liquidity in a sense, or there's no float in a sense. Money just leaves the ecosystem, right? It's either staked or it's not in the neobank. It's just out, or it's just in an account where it's spent in a day, right?
Yeah.
And so I think they're struggling with this.
So let's say I want to build a neobank that services people in, I don't know, Central America. My read of the market is that there is big demand from people who are young, who make money online or abroad, who get paid by Airbnb, who want to have joint accounts, who want to be able to buy the S&P 500 and Tesla shares and NASDAQ. But actually, like if you look at what the products that they have right now, they have like this very old school banking of like, okay, you receive dollars, you have to pay a $35 fee for every transaction.
Yeah.
Okay, you want to open a joint account, please come to our office. There's no like this modern UI, UX of like, oh, you can have different pots within your account, which like are different things, or rounding of change, everything that we take for granted in some other parts of the world that doesn't exist there yet. And I say, okay, like these people are going to be very open to this because they travel, because they make money from abroad, because they are used to like UX from somewhere else if they've lived somewhere else for university. And I want to build a quick and cheap neobank for this. Like, how would the stack look like? How would I work with you guys? What would it take basically?
Then, well, I think a bit of self-promotion is, UR is just it's an all-in-one, right? UR takes care of operations, compliance, all the dirty stuff that I guess neobanks like what you described don't want to deal with, because they're all about going fast to market. So I think Revolut early days was a good example, right? Everything is leased, rented. They're nothing but that sexy app with a value proposition that went after users. I think very similar. So UR and similar providers that provide accounts as a service or banking as a service can provide this to you, because what I hear is you're holding funds, you might need to interact with traditional banking networks at the same time, potentially bridge globally through blockchain because you're sending money. The users like global, traveling, receiving, multi-currency. So yeah, I definitely would pick a banking as a service provider. Usually they're all in one. If this banking as a service provider doesn't come with a card issuing platform or doesn't provide a BIN sponsor platform, then you have to add one. But for UR, we offer that, a co-brand partnership out of the box. So most of our partners choose us for a fast go-to-market. And eventually, they decide, right? Do they stick with us long term or do they build that out? That's totally up to them. So that's
got it. And
from what you say. It does sound.
And then how do you deal with the fact that then potentially, like, okay, like there's going to be users who want to move to like long tail currencies, like the Nicaraguan, I'm not even sure what they have there. You know, like how do you deal with this aspect of it? Like, because right now you offer, you know, a good array of currencies, but like there's opportunities in the long tail as well. Like, what infrastructure is there for that?
Yeah, that's a great question. So what we do today is two things. One, because we're also a bank, we can rely on the good old correspondent banking, like Rails, right? We can have direct correspondent bank, for example, in Dubai, and we can give you AED, right? But because we're also in a way like a licensed bank, we can also interact with fintech players in the region. So companies like Wise, you know, Tunes, all these like PSPs that help you move money. We can work with for all these, like you said, long tail exotic channels, because maybe there isn't a lot of demand. So we use these fintechs. They work with us because we're a bank. We use their channels. We send money to your Nicaraguan bank account. Becomes the main channel. Then, you know, we see the data. Then maybe we'll go to that bank, a bank in that country, and then start, hey, maybe a local banking relationship makes sense, and we'll start to hold currency, right? Because the business case totally makes sense. That's how we approach, I guess, enabling such a use case that you mentioned.
All right, Neo, thank you so much for this. Is there something that we've not discussed so far that we should discuss?
No, I think we're good. You asked a lot of great questions. Today we're a financial infrastructure for companies looking to bridge Web 2 and Web 3. And you've asked like great questions that, you know, allow me to tell people more about it. So thank you.
All right, no, excellent. Thank you very much.